am Ine Vidya Andani from Accounting Program of SMK 14 Jakarta is going to give an English presentation and the title is Adjusting Entries.
Okay, Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
The honorable judges, the distinguished teacher, dear participant and committee of this program, good morning.
Morning.
Have a good time, dear ladies and gentlemen. First of all, let us thanks to Allah because of blessing we can gather on this moment. First of all, I personally would like to thanks for this opportunity that has been given to me to deliver a presentation about adjusting entries. This is the main point of my presentation: the first definition of adjusting entries, the second function of adjusting entries, type of adjusting entries, journal of adjusting entries, and the example. First, definition of adjusting entries. Adjusting entries are the entries which made at the end of the period. And the second, to adjust the balance in trial balance with the actual condition that happened on that period. A company must make adjusting entries every time it prepares financial position. The function of adjusting entries. First, to show the actual financial condition. The second, to make the account up to date at the end of the period. The third, the resource entries to start making financial statement. This is type of adjusting entries. There are two types. First, deferral and accrual. Deferral is prepaid expense and unearned revenues. Prepaid expense like insurance, supplies, advertising, rent, depreciation. And unearned revenues is customer deposit for future service. And the accrual, the accrued revenues and accrued expense. Accrued revenues is service performed but not collected, and accrued expense is expense have been incurred but not paid yet. We are going to the journal of adjusting entries. For deferral, for prepaid expense, there are expense in debit and asset in credit, like rent, insurance, supplies, and advertising. Depreciation expense in debit, accumulasi depreciation and credit. And for unearned revenue in debit and revenue in credit. For the accrual, accrued revenue is accrued receivable in debit and revenues in credit. For accrued expense is expense in debit and expense liability in credit. This is the example. The first, insurance expired at the rate of 100,000 per month. The second is wages and salaries for this month is 6 million rupiah have not been paid. The journal for insurance expense is insurance expense in debit 100,000 and prepaid insurance in credit 100,000 rupiah. For wage and salaries expense, the journal is wage and salaries expense in debit and wage and salaries payable in credit 6 million rupiah. That's all my presentation. Thank you for your attention. Wassalamualaikum warahmatullahi wabarakatuh.
Okay, thank you very much. Would you please questions from the audience? Do you have any questions, audience? Yeah, okay, Ibu, please.
What if the company did not make adjusting entries? Is it okay?
No, because
Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
The honorable judges, the distinguished teacher, dear participants and committee of this program, good morning.
Morning.
And have a good time, dear ladies and gentlemen. Before beginning my presentation, let me introduce myself. My name is Fadila and I am participant number 5. Okay. First of all, I would like to thank to this opportunity that has been given to me to deliver a presentation about comprehensive income statement. There are 5 main points of income statement. First, definition of income statement. Second, the function of income statement. Third, types of income statement. Fourth, component to make income statement. And fifth, example of single step and multiple step. Okay, next the first main point. Definition of income statement. Income statement is a financial statement that measures a company's financial performance over accounting period. And next slide, the function of income statement. There are three functions of income statement. First, to report the profit or loss in the company. Second, to show the revenues and expense that happen to the company during a period. And last, as information for the management, investor, creditor about the making financial condition and for making prediction for the future. And then there are two types of income statement, single step and multiple step. Characteristic of single step are only one step. All data classified into two categories, income and expense. And the format is simple and usually used in a service company. And multiple step, characteristic of multiple step are several steps, step by step, and all data classified into multiple categories, and usually used by merchandising company. And then components to make income statement. Components to make income statement by single step are two, income and expense. And then components to make income statement by multiple step are net sales, cost of goods sold, operating expense, other expense, and other expense. In single step, income are operating revenue, other revenue and gains, and expense are depreciations, other expense, losses, and other operating expense. And multiple step, net sales are sales return, and this sales discount. And cost of goods sold, operating expense are rent, insurance, wages, and electricity, and trade. And under income, interest and dividend revenue are gain from the sales of fixed asset or marketable security. And other expense, interest expense, and loss from the sales of marketable security and sales of fixed asset. And this is example of single step. There are only income and expense. Income minus expense equal net profit or loss. This is form is simple. And then this is example by multiple step. There are is difficult, simple. And to get a net profit or loss, net sales minus cost of goods sold equal gross profit, and gross profit minus operating expense plus other income minus other expense equal net profit or loss. Okay, this be my presentation. If you have any question, I'll be ready to answer your question.
Okay, thank you very much. Give applause first. Do you have any questions, please, about accounting? Yeah, okay.
How can we get gross profit?
To get a gross profit, net sales minus cost of goods sold.
Okay, thank you.
Yes.
That's all. Any other more question? Okay.
What is the function of income statement for our company?
For our company.
Here is a sample of presentation from a student of SMK 14. Her name is Suci Siti Habibah, and she's going to give a presentation on a topic of statement of financial position. And it's time for us to listen a presentation from her. You can start now.
Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam
warahmatullahi wabarakatuh. The honorable judges, the distinguished teacher, dearest participant and committee of this program, good morning and have a nice day. I would like to let me introduce myself. My name is Suci Siti Habibah. I'm participant number 1. I'm from 14th Vocational High School. First of all, let's say thanks to Allah for blessing us so we can gather and join this competition. On a special event, I would like to thank to the opportunity that has been given to me to bring presentation about financial position. Ladies and gentlemen, what is financial position? Financial position is a financial statement that describes an individual or family's financial condition, that is by showing asset, liability, and equity. Summary of financial position. There is asset, including cash, account receivable, land, equipment, building, and intangible items. Then liabilities, including account payable, notes payable, and mortgages payable. And the last one, equity, net asset after all obligations have been satisfied. Accounting equation. Asset, same with liabilities plus owner's equity. Resource and source of funding. Resource is to use to generate revenues. Equal creditors claims agent's resource plus owner's claims agent's resource. Then we can see sample of financial position. Oh, sorry. We can see sample of financial position. On the left position, or name debit position, we can see asset. There is cash $40, account receivable $100, and land $200. Total asset is $340. On the right position, or name credit position, there is liabilities, account payable $50, and notes payable $150. Total liabilities is $200. And then equity, capital stock $100, and retained earnings $40. Total liabilities and owner's equity $340, and it must equal with total asset. Classified and comparative financial position. Point 1, they distinguish between current and long-term asset and current and long-term liabilities. Point 2, list in decreasing order of liquidity. Point 3, comparative. So, financial statement users can identify significant change over time. They have more than 1 year